segment where we give you both sides of the story and both aspects. In focus today is the entire defense sector, which is on fire. Now, Anushi, one swallow does not make a summer, and one good day does not mean that there is going to be an extended bull case for it. But having said that, tell us about how the sector has performed so far in FY25 and what FY26 looks like for it.
Absolutely, Tamanna. So if you see overall the defense space in the last 1 month or so, we have seen the sector gaining about 10% in the 1 month period, and this is sharply against what the picture has been in the last 6 months, where we've seen about 5 to 6% of correction overall in the defense space, and this was amid concerns on the order book, on the ordering activity and all. But from fourth quarter onwards, we have seen a strong pickup over here. So if you see Nifty index in general, we've seen about 11% of a move in this 1 month itself. This includes the likes of stocks like HAL seeing about more than a 20% of an upside. Even Zentech or Data Patterns are some of the strong movers in the stock today, which have, since the September lows, we have seen some strong up moves over here. So this is the bull case scenario that we are building for the sector. It is important to highlight that the kind of moves that we are seeing is also a lot of focus on the domestic plays back in the market amidst the volatility that we are seeing in the markets related to the export side of the business. So huge focus on that part as well. However, if we are seeing the overall FY25 picture, we did notice a bit of slowdown, which led to a guidance miss for some of the key players that is there. Like if you talk about BL, Bharat Electronics, they had clocked in about 18,000 crore of orders or so, missing the guidance by about roughly 25 to 26% on account of delays in ordering from the Defense Ministry for some of the 3 key orders which we had seen, which led to that. Another example would be something like a Zentech also. We did see in the third quarter when the company reported its results, we had seen lower number of orders for the company, after which the stock had remained under pressure or so because of this lack of orders which had been there. So lack of orders or delays in is something that had been a factor which did result in overall correction that we had seen for the defense space in general. However, if you are talking about what the expectation forward is, FY26 expected to be a pivotal year for defense ordering. There are huge high ticket programs that we are seeing in focus, which includes the likes of QR, SAM and shipbuilding. We are seeing the government is setting up about 25,000 crore of a initial maritime fund as well to support these kind of huge ordering activities that are expected to swell the order book of some of the major players in the industry. So focus remains on the picture forward. HAL also, if you see, in FY25, the order book had almost doubled to the 1.8 lakh crore from the 90,000 crore mark that we are seeing it, and is expected to further improve as well. Even if you look at the acceptance of necessities so far this year, the mark stood at about 2.2 lakh crore, with 56,000 crore of being the latest figure for defense acquisition proposals. So ordering from this aspect over here is something that would remain in focus for FY26. So expectations on revenue visibility for the future years is expected to improve from here on. However, the key concern again remains on delays in approval and execution of some of these high value contracts. Now, if you take BL for example, if you see 25,000 crore was the guidance that was given for last year, and this year the expectation is that they would exceed the 50,000 crore mark as well, with some of these next generation corvette orders, as well as something like a QR SAM, that's a quick reaction air surface missile orders. But any kind of delays related to the orders which are placed from the Defense Ministry, or delays in regarding with the companies, even if you look at HAL, now HAL had been one of the cases. We had seen the supply side concerns easing off, but any sort of which is expected to improve the delivery of the company going forward. But again, any sort of miss from the company's end would result in EPS cuts for some of these companies which are there. So that is one point that we should be focusing on. However, if we talk about the export side of the business, now, government has highlighted a count in other times that they remain steadfast on the target of a 50,000 crore of exports by FY29, and in fact, in this case scenario, FY25, we saw about 12% of growth in terms of where the exports were concerned to 23,622 crore. This was a mix of some of the orders that they had received from ammunitions as well as other artillery related orders, which led to these higher export building into the picture. So while this is a key positive for the company, for the sector in general, we have to also account for the overall imports, which continue to remain on a higher mix. In fact, if we see, this expensive imports are may have some impact on the domestic defense spending as well going forward for some of the players. We saw these India-France negotiations in terms of the Rafale so just concluding, and this would lead to higher imports for the sector as well. So this is something that we should be focusing on. On the last point though, now localization, indigenization is something that we have spoken about in various times. So domestic procurement is expected to improve further to 75% of a mark versus what we had seen 54% in FY19. So that remains as a focal point for the defense sector in general, as the push would be towards these domestic DSPUs that we are seeing over there. So higher ordering expectations from here onward. However, despite the correction that we've seen in the last 6 months, if you talk about the overall EPS growth versus valuation, that continues to remain a key monitorable for the companies that are there, because any sort of a miss in terms of whether guidance is or in terms of whether revenue growth is would lead to cuts in some of the EPS cuts over here, and valuations continue to remain expensive for majority of the players which are there in the space. So this is the overall take that we are seeing for the defense sector in terms of where the bull case scenario is and where the bear case scenario is.
Interesting.